Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, January 24th, 2018. I want to do a video on the semiconductors. If you're watching this video, it's for subscribers only. Uh, I just added SOXX, which we're looking at here. That's one of several semiconductor ETFs. I've added that as an active short trade. Um, as I mentioned on that post, I was going to hold off where, just starting out in earnings season, we had one big semi report so far, Texas Instruments. They were down today. And believe me, that is not the reason for adding this short. I, initially was going to wait to see a few more, but here's what I think is going to happen. I feel very confident because it's priced in the charts. Um, a lot of this is gut feel, I'll tell you that. Traded long enough that I can, as far as what's going on in the broad market, this melt up, I feel very confident that the upside now at this point is limited, and we're probably going to begin that correction I've been talking about. And originally I was talking about a 1 to 2, 3% pullback in QQQ, and I think we're going to get more than that now, because this melt up is just I'm talking about the melt up since the beginning of the year has just really cleared out all short interest, excessive bullishness, and I'm talking about charts that I've referenced, other things that I've read. It's not just all gut feel. There's a lot there in the market, so I think um, the stage has been set now for a pretty swift drop. But let's start out with, we'll stay away from the broad markets for the moment, and just focus here on the semiconductors. All right, this is SOXX. This is a chart I've been sharing for quite a while now. Very well defined uptrend line. I'll show you a couple other boards here, a cleaner version of this chart. But the salient points I'm looking at here are this uptrend line, very, very well defined. You can see it going back to early 2016. A lot of reactions. The more reactions a trend line has, the more valid that trend line is. And on a scale 1 to 10, this one's got to be up there close to a 10. And then you also have a very well defined upper trend line, and this is what they call a price channel, an ascending price channel. And as I've shared in the past, very often when you have a security or an index walking up a price channel, you can put a midpoint in that channel. So that's what I did here with this blue line. And again, this is all analysis I've shared in the past, pointing out that that line often acts as support or resistance. And once you break it, prices tend to trade either at the top half of the channel. Once they break down below there, you tend to visit the bottom of the channel, which you had here. You broke down, you did it over here, you broke down, you saw the bottom of the channel, you did it here. Then you back tested, you see you hit the bottom of the channel, fell back down. I'm sorry, the midpoint of the channel fell back down. And finally we hit it, tested it for a while and broke above it. And then we couldn't hold, fell back below it, and you can see just like any other support or resistance level, we didn't just limp on through there. Once we broke that support, there was an impulsive red candle, and as expected, boom, right down to the bottom of the channel there. So this is what I'm doing, is looking at trading. You can trade a security long or short within a price channel. Obviously, the primary trend is up, but you can certainly trade within the channel. What you want to do is go long on tags at the bottom of that channel. You can go short on tags at the midpoint. You can go long on tags at the midpoint from above, short at the top of the channel. So I think you guys get it. But nothing lasts forever. This is a very, very extended price channel. Normally, you do not see such a tight, well-defined price channel that spans for, what do we have here, of 2 years now, coming up on 2 years. The fact we had a divergent high here, I pointed out a couple months ago, what I called a minor divergent high. We had an extreme overbought reading. If you see down here on the RSI, this purple line is up around the 80 level. Normally, overbought on a security is 70, but um, I analyze every security, every index, every commodity differently because the semis are a volatile bunch of stocks. So therefore, 70 isn't really the upper end of their RSI. You can see 70 has been sliced through like a hot knife through butter. So that's why I put this line at 80. This is really telling you when the semis are overbought. So sometimes you have to make adjustments, just because the textbooks say 70 is overbought on an RSI, 30 is oversold. You have to look at every security differently. So that's that's the point. So I put the arrows here. We had an extreme overbought when we hit that 80 level there, and we had 11.3% drop. And again, this is going back 2 years. So we've only hit that level a couple times. The second time we hit it here, I pointed that out, and we had a 10% drop. That drop took us down perfectly to the bottom of the channel. So if nothing else, the takeaway is this: these semis do trade very well to the technicals. It's been an extremely resilient uptrend. A couple times I thought we might break this channel, and we didn't. We still haven't. However, for the first time in a long time, we had a divergent high here. Again, that led to a 10% drop. Now we have what I call a major divergent high. You can see very powerful divergence. And if you recall, I did some analysis not too far back saying that I would really like to see a semis eke out a marginal new high, and that would put in a divergent high, because had they reversed here, you wouldn't have had a divergent high. I always say divergences are not an absolute must for a trend reversal, but that's what I look for when positioning for a swing trend. And we have now negative divergence, pretty steep, not yet confirmed. You can see, and you probably picked that up from the trade idea that I posted if you read that this is somewhat of an anticipatory trade. I'm anticipating a breakdown in the semis. I'm anticipating negative reactions to the earnings. Keep in mind, as the more and more these leading semis report, it's not about what they report. It's not about whether they miss or beat expectations. It's all that matters is what the market's reaction is. So in other words, you can have a stock blow away earnings, and if the stock sells off, that is very negative. You can have a stock miss earnings, and the stock rallies. So again, it's most important thing is the market's reaction, and we'll see what happens. So if you took this trade or if you're considering it, keep in mind that it may not pan out if my take is wrong and we start seeing a lot of these companies rally after earnings, but I really don't think that's the case. All right, I've talked a lot about that. We'll just get back to the chart here. And you can see so far today we're down, and this is essentially a rejection at that channel. Yeah, yesterday's candle went a little bit above it, but again, you don't have to use that line. You can allow for a small margin of error, just like you had here. Point is that midpoint is roughly in the middle of the channel. So far there, you can see a pretty impulsive rejection. You can see the PPO turning down, and if we make a bearish crossover soon, which I believe we will, that will have confirmed this powerful divergent high, and I see a lot of hot air to be let out of the semis. So just from where they topped yesterday, if we do go on to hit my final target, keep in mind I always set my targets on short trades just above the actual support level, but you're looking at about a 25% drop. Even if we come down here to the first target, you're still looking at a 13% drop. You can juice that up times 3 if you want to trade SOXS. I do think my take is that the drop, once this momentum stops on the upside on the broad markets and on the semis here, I think it'll be a fairly swift drop. Therefore, you shouldn't have a lot of the decay in the 3-time leveraged ETFs. Normally, I might tell you if I thought we were going to grind around, take a while to get down here, stay away from those leveraged ETFs because of the decay. But for what it's worth, I think it'll play out pretty well this time. In fact, sometimes you can even do better than 300% the returns if the drop is mostly unidirectional, meaning a nearly straight down drop. You can actually do better than 3 times your returns, and that's all explained in the FAQ section of the site under the ETF section there. All right, so that's that. There's your stop. I used a pretty favorable RR. I think it was about close to a 5-to-1 risk reward, meaning if you're targeting this final target and you get stopped out, you have about a little more than 1 unit of loss to about 5 units of gain potential down there. So a very attractive RR, even if this one doesn't pan out. Your downside relative to what your profit potential is minimal. So that's that. There's the charts. Let's just look at a few more. Okay, this is the same chart, just a cleaner board. Again, you can see that trend line, how well defined it is. You can see the divergent high. So here's a simple pattern if we just take away the price channel. And as I like to do, there's 3 main big semi ETFs out there. We were looking at SOXX. Again, that one uses the same index, it tracks the same index as do the 2 leveraged ETFs, SOXS, the short 3 times short, and XOXX, PHL, the 3-time long. Here's another one, SMH, and you can see the same story. Very clean, well-defined uptrend line, terminating in a rising wedge type pattern. These are my favorite patterns to identify major trend changes. We don't have anything remotely close to a sell signal yet. A little bit of a down candle today, but that's not anything huge. This will be, once this cracks, then you'll have a pretty good sell signal when you get a daily close below this and all three of these. I'm going to show you the three ETFs. Now, keep in mind, why did I short it today? Well, just to get down there, that's about a 5, almost a 6% drop to get down to that trend line. Yeah, it is actually about 6% above current levels. So I'm getting a jump on the trade. If if you don't want to fight this trend, you can certainly wait for that level to go. There's also some horizontal support there. You can see all these reactions from above, reactions from below. So the safe bet, if you don't want to take a position, or maybe you want to start a position, you're looking where to add, wait till that trend line and or that 100.76 level goes, ideally on a daily close. So there's SMH, and I just wanted to again show you how all these charts are in alignment with these various semiconductor ETFs, because they all hold, there's a lot of overlap obviously, but they don't, that some have different companies than others, and they all have different weightings than one another, but yet the story is the same on these charts. So divergent highs, extremely overbought, and some trend lines and well-defined support levels. And this is one reason, guys, that I love shorting. This market has been tough. When your stocks are making new highs or sectors are making new highs, you don't have any overhead resistance levels to target. So all you can do is, you can take Fibonacci projections and some chart patterns, measurements, things like that. But on shorts, I can be much more precise with these trades because I can, with a high degree of confidence, determine where these reactions are going to happen. So something like this, for example, if I wanted to micromanage this trade, come down here, maybe we get a reaction off that trend line because we haven't tagged it in a while, then we go on to break it. That's certainly a good support level there, little bounce there, move back down here, and then assess the charts at the time. If we have some divergences setting up on the 60-minute chart, maybe something that looks like a selling climax, that might be the end of that trade. Close it out, maybe go long, but we'll just have to see when we get there. Okay, and let's just wrap this video up looking at a few individual semis. Here's a list of all the holdings within SOXX. So we'll just go through, and I have these sorted by market cap. That's what I like to do. Obviously, the larger companies will have usually more of a weighting, more of an impact on the sector, and they're also your leading semiconductor stocks. So here's the one of the largest here is Taiwan Semi. What I see on the chart, I can see we still have divergence here on the RSI. And you just go back in time, you can see the divergences. The divergent highs marked, we had divergence here, 10% correction. We had divergence here. I didn't measure it out, but that looks to be a good 6-8%. And although we don't have the divergence anymore in the PPO because that's taken out that previous high, actually we had a divergent high right here. You can see it, and that was probably good for about a 10% correction. And now we've had this near vertical run up. And again, there's still divergence on the RSI, so I expect this one to come back into that 30, minimum 38.43 level, I think is what we see. It may not be a straight shot down there, but I think we get that. And you can also see a long-term uptrend line. In fact, we have to go back a little longer here. Let's see, 2-day period chart. There it is, primary uptrend line. We breached it just for about a week or so here, snap back above it, but I think that's still a significant trend line to watch. You can see divergence actually on this time frame. This is a 2-day period chart, by the way. Every candlestick's 2 days. And then what I want to do is go out to the weekly and paint the big picture here. This was a key uptrend line off the 2008 lows in Taiwan Semi. We broke it. There was a 33% correction off the highs, and now we have a very, very well-defined trend line. Look at all the reactions on this trend line. We have a divergent high. You can see the negative divergence there. And so what this is telling me is I'm not just looking for a quick pullback trade. I'm looking for a move down in Taiwan Semi. If this pans out over time, we could drop about 40%. Intel, obviously one of the biggest semiconductors out there. And you can see the divergence, negative divergence. It is confirmed. I haven't updated all of these charts. That divergent high is now confirmed because we have a bearish cross on the PPO. There was a head and shoulders pattern played out nice. That was pointed out back at the time. But here's a primary uptrend line we need to watch. Not very well defined. There's a couple reactions. That one sliced through it, but I think it's worth watching. And as far as price targets, when I look at this chart, I can see Intel coming back into this level here. You have a horizontal line right here, horizontal support. You have a trend line just below it. So I think over time, Intel works its way back down to about that. What is that? About the block the numbers about the $38 level. And again, it's not going to happen overnight, but if you're looking for a longer term swing target, that's what I'd be looking for. Let's see, NVIDIA. This one, a lot of hot air to come out of this one. It's quite overvalued. You had this rising wedge pattern. You still have a divergent high. You can see this strong divergence building here on this one. This is a daily chart. And when you look at the weekly chart, again, these stocks have just gone, this isn't a parabolic run, but it is a very steep ascent. And the steeper the ascent, usually the harder the fall. You can see very powerful, very clear negative divergences below on this most recent move up. And essentially, when you look at these two lines, you had a rising wedge, breakdown, and a back test. And that's all that is. So this one, I believe that NVIDIA, I think over, let's say sometime in 2018, I think there's about a 50% downside in that one. TXN, Texas Instruments, Divergence Extreme. This is the most overbought the stock has been in. This is a weekly chart. I apologize because I'm jumping back and forth between weekly and daily time frames, and I might not mention that every time. We were very overbought back here. From that point, I use log scaling. It may not look like much, but that's about a 35% drop right there. And we're extremely overbought now. As I said, Texas Instruments reported last night, and the market didn't like what they heard. Stock is down 7% today alone. And again, I would not, I'm not, this isn't the only reason that I'm shorting the semis today, but I do think this is a start of things to come, and I think we'll see more and more of this as these semis report. On balance, I think the reactions are going to be negative. And I also always say it's not the initial reaction, meaning what happens the very day after earnings, but what you want to see is what happens 2, 3 days later the following week, because the initial reaction can often be faded. And sure, that could happen here. Maybe we hold support on this trend line and continue higher. But I'm looking at a high level bearish PPO crossover. I'm looking at extreme overbought readings and a lot of hot air in Texas Instruments, and I think there's more downside. So maybe we'll wrap it up here. There's Broadcom, AGVO. Here's the percentage drops. I showed you the divergent highs. I've shared this chart in the past. These little small divergent highs back here. And let me even get rid of this big divergent high. Oops. Let me just show you what I'm looking at here. That is very steep, large divergence, this line I'm moving, but we also have divergence currently right here. So again, it's TA 101. I know the trend has been relentless to the upside, but here's a 33% drop after negative divergence on the weekly chart, 24% drop, 34% drop. This divergence is uh, uh, as large or larger than any of these other divergences. The stock is very extended. I don't see anything less than a 32% drop from current levels, not even off the highs from current levels in Broadcom. And then finally, I'll wrap up one that's a little more down the list. AMD. This one I felt so strong about. I did a video last year on this stock, and actually, coincidentally or not, this one did top back then. This one topped in looked like early 2017, March of 2017. That was a high, and I pointed out this very, very steep ascent, overbought, divergent high, everything I like to see, just like we had overbought, divergent highs here, and I went through in that video. I showed you these corrections, 65%. I can't grab the line exactly there, but about 80% from this point. Again, I'm just going uh, even with the highs there from that point. Well, you had it here. You had a 47% drop If you held it to there, stock dropped about 57%, and if you held it down here, you had over an 80% drop. So wash, rinse, repeat. I know everybody wants to be long right now, and it looks like stocks are going to go up forever. But here's one again that's already started playing out since that high in early 2017. It's never recovered. It made a second test at that high later in the year, but it's already fallen from that point about 38%, and this just looks to be a kickback rally with more downside to come. So I think at bare minimum, I think AMD is coming back here at about that 850-ish level, and that's about almost cut that stock in half almost. Yeah, about 46%. All right, let's wrap it up there. We'll see what happens. Like any trade, this one may or may not pan out, but I think it's objective. And again, the risk reward on the SOXX short, I think, is favorable. And what I may do personally, I might add some of these on the site as we go through earnings season. Some of these individual companies get earnings out of the way. I might position short in some of the individual companies. But at this point in time, because semis are so volatile, and they can move double digits in either direction. They can gap after an earnings report. I think you're better off at this point in time sticking with one of the ETFs that mitigates any losses should a semi gap against your position. If you have an ETF, it's one of dozens of different companies, so it's not going to have a huge impact on the ETF. So we'll see what happens, and I'll continue to update this trade if anything changes. This has been Randy Finney with Right Side of the Chart. Hope you enjoy.